Hello, chart watchers and Decision Point faithful. Welcome to this Monday, September 9th, 2019 edition of Decision Point with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, of course, welcome back. All right. How's it going today, Dad? What you thinking of these markets right now?
Well, first, I think we should, recognize that people are coming back to a new time now, since we checked
Yes.
our date and time. The market is in a holding pattern. It's basically waiting for the Fed announcement Wednesday of next week. It's still going to be vulnerable to news having to do with trade. I don't take that news very seriously anymore, but a lot of people seem to, because it bounces the market around pretty well. And then we have Hong Kong. What's going on there? I don't have a good feeling about it. I'm not optimistic that the Chinese communists are going to let this go on. There's a chant going around, remember Tiananmen Square. And that's not by the demonstrators, that's the communist government telling them that. So,
Yeah.
but anyway, so there we are, basically in a holding pattern until the Fed speaks next week.
Yep, I have to agree with you. We'll look at a couple of those charts for sure. The broad market indexes, of course, we're going to cover that. We'll look a little bit at the global markets as well. Got your DP indicators on tap. I'm going to give you a sentiment update since we have moved our show to Mondays. I used to do that on Market Watchers live in the morning, so now we'll just move a shortened version here to our Decision Point show. Carl's going to be going over the big $4 gold, oil, and bonds. And then, of course, the bonus, Carl's grab bag. We'll see what he has in store for us later in the show. Let's go ahead and I'm going to start off with looking at our scoreboard indexes. The main thing I wanted to point out today is we did get a new intermediate term trend model buy signals. The 20 has crossed above the 50 on all but the Dow Industrials. And the Dow is pretty close to having that crossover. So we probably will see this change unless we have, major correction or something like that. But we should see this one change sometime this week, even if we are in that holding pattern, because price is still located above the 20 and 50-day EMAs currently for the Dow. So anyway, interesting to note that we are seeing this intermediate term shift as far as our signals to the upside for all but the Dow. As far as the sector scoreboards go, haven't changed since last Wednesday when I did my report, and haven't changed since Friday since Carl did his report. So really what we're looking at are buy signals still in mostly the defensive areas, real estate, utilities, and consumer staples. Technology is trying to make a move to lead a little bit more. But I was looking at some of the technology stocks earlier today on Market Watchers Live. Wasn't particularly impressed with a lot of them. And I'm going to show you some interesting looks on the NASDAQ 100 that I think will also give you some insight onto the technology sector. All right, so let's go ahead and look at some charts. And we will see if my cursor, oh my gosh, my cursor did not disappear. No worries. Okay, so let's first start off. We're looking at the price relative to the S&P 500 on these major indexes right here. And the main thing I would note is a little bit of improvement here for the performance of the Dow. You can see we have rising bottoms on those price relative readings, and a little bit of deterioration on the NASDAQ. But really, when you look at it for the week in the thumbnail, we started here. And so technically, it's more flat, I would say, as far as what's going on relative to the S&P 500. S&P 100 flat. The The good news, I would say, is that mid caps and the small caps do seem to be making a move toward outperformance. And that's generally good for the market when we start to see those small caps participate more in the market. Broad market indexes, just in comparison of the price charts right here. As you can see, the main issue that I have is the S&P 400 and 600. Again, we talked about them not performing that well. They still have a lot of upside potential, I guess you could say, if we do start seeing the market move back toward those all-time highs. Lots of room for these guys to grow, and hopefully they'll start doing just that. Dow Jones did pop just above that overhead resistance that we had at that April-May tops back here. And looking at the global markets in general, most are still in decline in comparison to ours. We've got some declining trends still on the German DAX, UK still struggling. French markets are actually, with the Canadian markets, performing relatively better than most of these other indexes. The Nikkei is really suffering here in a declining trend. And you can see that the India Nifty 50, although it did make that new high back in that May-June timeframe, it's really been in a declining trend ever since. And Shanghai still not able to shake their long-term bear market setup here. All right, so let's look at these daily charts real quick, get a feel for what's going on in the markets. There's your Dow chart. What I'm going to point out in all of these scoreboard index daily charts is note the OBV. So we're still looking at a very positive configuration for the OBV on the Dow. We did get that breakout above the overhead resistance that I had marked here from back in April and May, which is certainly encouraging. Upside potential, you know, we could end up seeing those new all-time highs. I think the Dow chart looks pretty good. We don't have that 20-50-day EMA crossover, which I noted on the scoreboards earlier, but definitely headed that direction. I like the look of this one because we are seeing, after the gap up, we still are seeing higher prices coming in on the Dow. So it does, I think the industrials still look pretty healthy. But notice what's going on with the OBV on the NASDAQ 100. Declining tops, certainly not rising bottoms. And when you look at the price tops, obviously quite a negative divergence going on there. This is why I'm feeling a little less confident about the technology sector. I'm not liking the fact we're not getting that volume in. And notice the difference. We got the gap up, and since then the NASDAQ 100 has been pulling back rather than rising like we saw with the Dow Industrials. All right, OEX, whoops, that's the wrong one. OEX looks pretty much the same. I would note the fact, if I can get this to update here. There we go. I would note the fact that also S&P 100 still looking pretty good as far as the on-balance volume goes. The one we really want to look at, though, of course, is the S&P 500. What's going on here? All right, so the PMO buy signals there. And again, we're seeing the right volume patterns on the OBV as far as all of the other large caps we looked at, minus the NASDAQ 100. It just doesn't look as healthy. There's your 20-50-day crossover for the S&P 500. I think one of the things that might concern me right now, you know, with the sensitivity the market is having, it seems, to some of the news that is coming out. The Fed will be speaking Wednesday. So like Carl said, that's going to be something to pay attention to. If we get a holding pattern here for Tuesday, tomorrow as well, my only concern right now is we could be looking at an island forming here for an island reversal. So while there is some upside here to make that move up to the all-time highs, and everything is really pointing toward that happening, I still I'm a little bit concerned about the possible setup here. I think ultimately the way it's going to resolve is going to depend a lot on what the market thinks of the Fed. All right, real quick here, looking at the short-term indicators, breadth is starting to show the deterioration, and the VIX has now kind of tapped on the top of the upper Bollinger Band here. And typically, you know, when you get those tops on the upper Bollinger Band, that's when you start looking for those price declines. We got the tap. It didn't actually get through it, but I think we are vulnerable in the short term for a price decline based on the fact I'm seeing these breadth numbers declining as far as new highs, advanced minus declines. Not a really pretty picture for the very short term. Short term is overbought, turning down, which is also not particularly good for the market and not something I would want to see on the heels or on preceding a possible move to all-time highs. That chart worries me. And the intermediate term indicators, they really picked up speed and they are now overbought. So now that is a concern. So we'll have to see. I'm really curious to see where we top out on the ITVM. Typically, this is the volume portion of that indicator. And if volume is not supporting any move to the upside, if we continue to see that, something to note and consider. All right, I am going to pass it. Let's see. I'm going to do really quick, just look at a couple of sentiment charts here since we didn't have a sentiment update, but I want to make sure I give you plenty of time, Dad. So no worries.
Okay.
All right, so here's the put call ratio. We are rising off of these bottoms, and that's actually something you look for because typically when you're looking at these ratios on the rise, you're typically going to be coming out of a price bottom and moving higher. We're still not really seeing a consistent low here and a rise. We just aren't seeing it right now. And that kind of concerns me. I'd like to see that actually moving to the upside, but you can see that we're still not what you would call overbought on the put call ratio. And a look at AAII I thought was interesting this week, mainly because we're looking at the bear bull ratio. The bull-bear ratio. We got that really low reading at the beginning of August, meaning everybody was especially bearish, came out of that with a bit of a rally. And now that's, bullish behavior is back. We're not seeing those low readings now, but that's what we want to watch for as far as sentiment, because when you do get those low bull-bear ratios, it typically does proceed and move to the upside. As far as our money market managers are concerned, what are they doing? The active managers, they have pulled back their exposure preceding, this is from last Friday. So that is preceding the move that we saw today to the upside. We've seen exposure much lower than this. This is low for what we've seen previously. I mean, those were the lows that we saw back here from that May-June point at the low that we got back here. So I still think that exposure could end up pulling back further. And that would be really a more bearish sentiment setup there. I feel like we're in the middle here though, and it's just more neutral than anything. And the RIDEX chart. We talked about the VIX already, so I don't need to do that. But the main thing that I'm noticing is money coming out of the bear funds and starting to pull back out of the money market funds with an increase in the equities. So certainly people are feeling less bearish than they did before, is what that's telling me. So we're seeing a little bit more bullish sentiment out there as far as where the money is going. All right, so that's all I have for our sentiment update. I think I pretty much covered everything. We do have the gold sentiment. I certainly like your opinion on that. Let's see, where is it? There we go. And this was as of Friday, so I don't have the line up here, but we are seeing those, still seeing those increases, still seeing a lot of discounts even off of that rally that we got earlier.
Right. I don't have, of course, gold has pulled back the last 3 days. Mm-hmm. And so I certainly don't see any improvement in sentiment under those conditions.
Yeah, absolutely. All right, let's go ahead and pass it to you and check out the big four. There it is.
Okay. I should comment that I'm going to start using charts that are more sized to the way I read them. We have a lot of these charts go from all the way from one side to the other. And then I don't have charts scaled to where I have to move my eyeballs to right and left to see the whole chart. Let's go to, there we go. Okay, the dollar, not doing too much right now. The PMO is turning down, but we're moving generally up with this, but I don't know how long that will persist. We're only doing daily charts today because it's only the first day of the week and we don't need to be looking at a weekly chart.
And if you want to see the weekly charts, Carl writes that all up every Friday in the weekly wrap. And so you can get all of those weekly charts and his opinion there too.
USO, that's 2.5% jump, but it's been jumping around. It does that. It goes big moves every day, but it's been, narrowing in the range right in here. So I honestly think we're going to see lower prices ultimately before we go up and challenge this resistance. I skipped gold. Right, nothing new here, is it?
No.
I'll tell you what, even though I did this recently, the monthly gold chart, just want to show this is the biggie for me, is a saucer formation and it's coming up. It's broken out, it's advanced 50% from the bear market lows. And I expect to see some correction here so we get a handle on that saucer. That's what I'm looking for. And I just think gold is going to stay in the uptrend. And it's been in an uptrend, let's face it, since 2016. Bonds in a flag formation, one of my readers pointed out on the bulletin board. It is, I think we can call that a flag formation. And but the one thing is this PMO crossover, downside crossover. But if the Fed cuts interest rates again, I think we'll see another move up here. And I think it's a foregone conclusion that they're going to.
I suspect so.
Yeah.
A lot of pressure to do so.
And my bet on that is that if they only go a half point, the market won't like it. If they go a quarter point, the market won't like it. If it's half a point, we may see some rally out of that. And we haven't updated today. One of the things, this chart is the long-term chart of the interest rate array. There we go. It takes a while for it to load. I show this, and every time I look, I said, this is trying to tell me something, and I need to figure out what it is. And then I figured out this weekend. What we have here is we had an era of rising interest rates, and we're now in we've been in an era of falling interest rates for what, we're going on 30 years, or is it 40? But it's what it really gets to me is that we're really getting in uncharted territory here, and I don't think we're going to like the outcome. It just really worries me, and I look at this chart every week and worry about it. Okay. I had another bright idea this weekend. We've got our Golden Cross percent index, which is the percent of stocks on the S&P 500 stocks on Golden Cross buy signals. They've got the 50 it's crossed up through the 200 EMA. And then I thought, why not for the shorter one, we'll call it the Silver Cross percent index. And this is the one where we're tracking the percent of stocks with the 20 EMA above the 50 EMA. And it's improving, as it obviously should with this kind of a move. The gold across is not too excited about what's going on yet, but it takes a lot for it to be moved. My lead article in the blog for Friday had to do with the BPI for the NASDAQ composite. That's the bullish percent index, the percent of stocks in the components of this index that are on point and figure buy signals. And notice that for the NASDAQ, even with the NASDAQ pushing towards, I think it's about 2.5% off of the all-time highs, we've got only 45% of the stocks in the index are participating in that rally. That's just terrible. You would be better off looking for short sales in the NASDAQ composite, it would seem to me. The New York Stock Exchange composite, we got up to 50 today, 50%. But notice that since 2018, the New York Stock Exchange composite, it's been in a downtrend. It's not going anywhere good. And it's getting weaker, as even with it pushing up, it's as weak as it's been in quite a while. Look at this chart, Erin's version of it. I wanted to make a point here. Yes, we did should have an arrow on this, the red arrow, because it got close enough. To me, that was a touch. That's all it really needs to do. Notice this is the bands move up and down and can expand and contract. And basically, they readjust what we should call overbought and oversold. The range varies, and that's interesting, I think, very useful. And another thing today, notice we've got almost up to the 250-day EMA of total volume for the index. One of the things that we're going to start to cover in this new time zone is segments, sectors. And this is the way I set up my sector chart. We've got 11 sectors within the S&P 500. Each sector has, each stock is listed in only one of the sectors. We have our technology index, technology spider, I should say. And notice now I cover the normal stuff, the OBV, and it's not doing that well. Here we have the bullish percent index for this sector. And notice we're getting a slight decline in the tops here. I don't consider this a major deal because it's still right up in here is still in close to 90. Right now we're as close as we are to new all-time highs. We're still only at 73, 74%. I'm going to be tracking the percent of stocks above their 20 EMA. And you see here we've got, I have to resize this chart for this presentation, but we notice the decline into that market top of the percent. They get that internal weakening. Right now, it's recovered certainly close enough to the overbought level. And I think that's tells me I'm going to be looking for another top price top. And then finally, we have the relative strength index for the equal weight technology index. So same stocks but equal weighted, and that would tell us right now it's been rising. That tells us that the smaller cap stocks within this sector are actually starting to come alive. Right, here's that bullish percent stock that I covered on Monday or Friday.
Yeah, so you're with me, technology sector, a little bit soft.
I'm sorry?
So on the technology sector, you're kind of with me that it's sort of soft right now. I wouldn't be looking for a whole lot of action out of it yet.
Right,
Mm-hmm.
right. Again, it's because some of a lot of the stocks are not yet participating. You know, it should be up around in here.
Yeah.
So, but it's not.
All right. Sorry for interrupting. Go ahead.
Okay, no, that's fine. I wanted to look at another one of the sectors, industrials. Notice they're very close. We're very close to getting a crossover, so it's close to getting going back on the buy signal. Real estate sector, one of my favorites. This interest rate thing is going to come back and bite us, just like it did in 2007, 2009. It's a little weak. We've got not that many stocks in the sector participating in this rally. And it's very overbought with the number of stocks of over 220 EMA. Again, the same story. We've got the smaller cap stocks in the sectors coming alive. I think I've covered everything I wanted to. Did you have something?
I would just reiterate to everybody that we are now on Mondays at 5 p.m. Eastern from here on out. And I'm launching a new newsletter. I'm actually going to start it today called DecisionPoint Daily Diamonds, where I'll be taking one of my many decision point scans and running it and seeing what 5 diamonds in the rough I can find. So very excited about that. So do check out the DP blog for that later today. And other than that, I think that does close it up. I really like these new sector charts. I think they're going to be great on the show coming through on regularly on Mondays now. So I definitely like that. And I sat down with you, Dad, and we came up with a little scan that is his. So I'll be running that one as well on some of these daily diamonds. But anyway, thanks everybody for coming and joining us today. And again, don't forget we're now on Mondays at 5 p.m. Eastern. Do join us. If you could fill out the survey, that'd be great. Happy trading.